some big disappointments for big tech. Welcome to Market Insight. I'm Ludovica Brignola. Some mega caps have disappointed a market used to impressive earnings and sky-high prices. Netflix and Alphabet missed some earnings expectations. Meanwhile, the growing cost of the AI race also added to investor fears after Alphabet last week reported a bigger than expected rise in capital expenditure to support its generative AI technology. Investors are now looking ahead to Meta and Apple earnings, and what should they expect? Well, joining me now to talk about all that is Melissa Otto, head of the TMT research at S&P Global Visible Alpha. Thank you very much for being with us today, Melissa. So Netflix and Alphabet have already reported the latest earnings in 2024, and they have been rather disappointing. What's behind this?
Right, there's a couple of issues. Thank you, first of all, for having me on. It is a function of expectations. Right now, expectations have, come up over the past 6 to 12 months. And so companies that are not really meeting the high end of guidance or exceeding those expectations are seeing some pressure, particularly when it comes to their outlooks. So it's one thing to beat the quarter, but they have to also beat in terms of where expectations are for the next quarter or the fiscal year, however they happen to guide. And I think for both Netflix and for Alphabet, there were parts of their business that gave the investment community a bit of pause and didn't seem to really provide that additional alpha that the investment community has gotten used to. I think overall, there's also a looming anxiety around advertising. We haven't seen advertising really driving the sort of growth that it has in the past. And I think we saw that creep into YouTube numbers. And, we're seeing Netflix also entering the space and, saying, it's a little slower than we were expecting. So, net, I think, that's probably giving the market a little bit of a pause.
Right. And on that note, it's really interesting because in your notes you say consumers are not spending more time on digital media, but they have been increasing the number of digital services used. So is the ad landscape changing then, and what are the implications?
Yeah, that data came out of the Kagan Media and Telecom Summit, and I thought it was a really interesting data point highlighting just that the space is getting more crowded, which indicates that it's potentially getting a lot more competitive. So companies are really kind of jockeying each other for those eyeballs and for that that screen time that is going to help support the ad spend.
Right, and looking at the later today, but also tomorrow, your expectations seem to be a little more positive for what concerns both Meta and Apple. Why is that the case?
Apple is going to be an interesting one. I'm excited to hear what they have to say about Apple Intelligence and what their iPhone units look like in the quarter and what their outlook is going to be. I think there's a view in the market at the moment that Apple Intelligence could potentially help drive a refresh cycle. We haven't really seen that. And one of the things that is part of that is that ultimately you're going to see potentially you're going to see the Apple Intelligence hopefully help support broad adoption of artificial intelligence, where we really haven't seen either hardware or any sort of application really helping to drive that broad application. We've heard a lot about it. We know they're building out the infrastructure. We've seen the CapEx numbers rise. We've seen NVIDIA rise. But who's actually using it to make their lives better, more productive, more efficient? How is it saving money? I haven't really seen a slam dunk application or hardware that's taking us there. It's something that we really need to see in order to get that iPhone moment like we had 10 years ago, where everybody's like, I got to get one of these smartphones. Who's saying I got to get a Gen AI bot? And we need to really see that. And maybe Apple's going to help foster that broad adoption.
That's interesting, and we'll see what happened on that front tomorrow. But meanwhile, Microsoft has actually missed expectations for certain key areas. What's happening there?
Yeah, Microsoft's an interesting one. And this is clearly another example of expectations coming into play. Overall, the company had a decent quarter, but they missed expectations on a couple of critical data points that I think probably has led to some of the softness in the stock today. First and foremost, the Azure business, based on S&P Global Visible Alpha consensus, was expected to generate 31% growth in the quarter, but it delivered 29%, which was a 200 basis point disappointment. And then looking ahead for Q1, the intelligent cloud expectation was $29.1 billion coming into the quarter, but their guidance was below that. So I think net, the overall intelligent cloud / Azure business came in a bit lighter than expectations.
Great analysis. Thank you for being with us today. Melissa Otto, Head of TMT Research at S&P Global Visible Alpha. And that is your Market Insight. Don't forget you can watch more videos on Reuters.com.